77.66 lakh crores. That's how much wealth that got created in 2024 for market participants. Were you one of them? In this week's episode of The Week That Was, or should we say the year that was, we're going to explore how the markets performed in 2024. We're going to briefly talk about how Fabits portfolios outshined benchmark indices with lower volatility and lower risk. We'll also look what's in store for us in 2025. So stay tuned. A recap of 2024, a year of ups and downs. The year started off with a bang, carrying forward a lot of momentum that we saw at the end of 2023. This despite valuation concerns, especially in the mid and small caps. Throughout the year, the markets kept oscillating, but the overall trend remained upward. The election results brought in a little bit of turbulence mid-year, with Sensex and Nifty falling over 6% in a single day. Remember, the markets had assumed that the current incumbent government would get a clear majority. However, as the government secured another term, markets quickly readjusted and embarked on a steep upward climb. By 26th September, the Nifty had hit an all-time high of 26,126. That was a whopping 20.6% gains from the start of the year. That was also the day the markets hit a roadblock. The upward momentum fizzled out. Over the next 4 to 5 weeks, foreign investors pulled out a whopping $18 billion from the Indian markets, causing it to fall over 12%. Fortunately, domestic investors came to the rescue and prevented any further slide. By year end, Nifty 50 closed out with a modest gain of 8.87%. Meanwhile, the small and mid cap indices surged ahead, closing out with 26% and 23% gains respectively. This marks the 9th consecutive year of positive returns for the Indian equity markets. Over these 9 years, the broader indices have delivered a cumulative growth of over 200%. That's an extraordinary period of wealth creation. A quick look at the sectoral performance. The top 3 sectors that did really well in 2024 was pharma, realty, and auto. The darlings of 2023, the PSU stocks, PSU banks, and the defense sectors took a backseat in 2024. A quick look at the US markets, which is considered the mother market. The US market soared in 2024, especially post-presidential elections. The broader index S&P 500 closed out with a 23% gain, while the tech-heavy Nasdaq fund closed with a gains of 28%. Gold continued to shine in 2024 and closed out the year with a healthy 26% gains. This was largely driven by political and economic uncertainties, geopolitical tensions, and several central banks such as that of India and China accumulating gold as an alternative reserve. On the currency front, we do not have good news. Rupee continued to decline against US dollars. It was down 3%, hitting a low of 85.78 against the US dollars. The only good thing is we did fairly better than other Asian currencies. One lesson for all investors from 2024. Markets are cyclical in nature, with best performing sectors changing every 1 or 2 years. Chasing these sectors based on past performance through thematic or sectoral funds usually leads to disappointment. Several new fund offerings in 2024 in defense, PSU, and banking sectors have given negative returns. Stay away from sectoral funds. Instead, focus on disciplined asset allocation for long-term wealth creation. This is one of the principles that we use at Fabits to build strong portfolios that yield consistent returns while reducing risk or volatility. Our long-term portfolio aimed for goals such as retirement yielded 23.02% returns in 2024. Our mid-term horizon portfolio aimed at goals such as education or wedding yielded about 19.86% returns, while our short-term portfolio aimed for goals within the 12 to 36 month period yielded about 17.62% returns. Again, we were able to beat the benchmark indices comfortably with lower volatility and lower risk. A strategic allocation into international fund, especially the tech-heavy Nasdaq fund, was a game changer in 2024. In the last quarter of 2024, while the Indian market struggled, the US markets continued to surge, thereby offsetting some of the losses and reducing the volatility. The various degree of debt and gold exposure in our funds further cushioned the fall and resulted in better performance than the benchmark indices. The secret sauce to successful investing are: keep your investments simple, keep it diversified, ensure you stick to your financial plan that is aligned to your personal goals, and have some patience. More often than not, you will be on the winning side. Looking ahead, 2025 could be a year of mysteries. If the last quarter of 2024 was any indication, 2025 could bring more challenges. And here's what we need to watch out for. First, the Trump effect. With Trump returning along with maverick Elon Musk adds a lot of unpredictability. The promised tariff hikes could disrupt global supply chain and trigger global inflation. I personally think some of these tariff hikes are ridiculous and might not see the light of day, but Trump will strategically use them as a lever to strike deals between countries that would benefit the US economy. Now, how India manages these threats, these deals, and these opportunities are critical for both short-term and long-term growth. 2. Slowing Indian economy and consumption challenges. The urban consumption has dipped significantly thanks to stagnating wages and higher and sticky inflation. A clear disparity is emerging between two segments of the population. A larger segment is struggling and is often borrowing money to meet their lifestyle or their consumption needs. On the other hand, a smaller but a wealthier group has seen incredible wealth creation over the last few years and is thriving. This segment is buying premium real estate, cars, and phones, often using debt to acquire these assets. RBI has already revised India's growth rate from 7% to 6.4% for the financial year 2024 and 25. How policymakers and RBI balances growth and job creation on one side and inflation and interest rates on the other are critical for positive outcomes in 2025. 3. Geopolitical tensions. We already know about the existing war crisis, Russia-Ukraine, and the Middle East crisis. However, more tensions and more uncertainties are brewing. China has been blowing hot and cold towards its neighbors, Korea, Taiwan, and India. South Korea is a political mess. There is an immigration backlash in Europe. The birth rates in Japan and Southeast Asia has dropped significantly. All of this could have a global impact. US government debt has reached unprecedented level and high interest rate and inflation in US could have a global impact. A lot of this is beyond India's control, so we need to keep a keen eye on these events. As we step into 2025, it's important to acknowledge these headwinds and expect moderate returns. The coming year could be a year of recalibration where the markets might stabilize after 4 years of growth and euphoria. Remember, a well-diversified portfolio with inbuilt guardrails or side rails are critical during such times. Such a portfolio will ensure or cushion your downfall or protect your downfall while positioning you for long-term growth. If you're unsure how to build such a portfolio that is aligned to your long-term and short-term goals, do reach out to Fabits. Let's work together to make 2025 another great year for wealth creation. Standard disclaimers. All the views expressed here are personal. This is not investment advice. I or customers of Fabits might hold assets that were discussed today. Remember, investing in equity markets are subject to market risk. Please read all necessary documents before investing.